Welcome to ETVFutures.com. Today is Friday, December 28th. I'm Caitlin Sisney with your Commodities Open. Crude in New York rose a fifth day after an Energy Department report showed U.S. inventories declined more than expected last week. Crude is trading at $97.59 per barrel on the NYMEX. Meanwhile, natural gas is trading at $7.29 per million British thermal units. Gold rose and is heading for the biggest annual gain since 1979, as a decline in the dollar boosts demand for the precious metal as an alternative investment. Gold has gained 31% this year as a weaker U.S. currency, record energy costs, and continuing conflict in the Middle East sparked demand for the metal. Gold is trading at $839.70 per ounce. Meanwhile, silver is trading at $14.95 an ounce. Today, we're joined by John Kilduff from Man Financial. John, what is your outlook for the commodities market as we head into the new year?
Caitlin, once again, we have a big rally going on in the energy complex. Here at MF Global, we've stayed stubbornly bullish throughout the pretty impressive pullback that occurred after we hit the 99.20 all-time record mark on a nominal basis and stayed with it as it traded back down sub $90. For us, everything, all the elements remained in place for the bullish picture to remain for crude oil and for the energy complex itself. Obviously, the most recent catalyst is a reemergence of the geopolitical premium as a result of the destabilized situation now in Pakistan. A major worry that had really gone off the boil as a result of the seeming political solution that had been worked out vis-a-vis President Musharraf, the late Benazir Bhutto, and even the military having buy-in to what was going to be happening here in their elections in January, obviously fueling a huge rally. That and plunging inventories of crude oil here in the U.S. and really globally. Note that Japan is at 30-year lows on their crude oil inventories as well, has worked to produce a rally in the products as well, with RBOB hitting a record high, heating oil pressing on its record high levels, and natural gas, of course, getting short squeezed yesterday, and we haven't seen some follow-through today, well above the $7 pivotal point that has us, again, everything really looking bullish right now. As a matter of fact, getting back to the crude oil, the pullback that we saw earlier in the week helped to flatten out the steepness of the technical trading chart, and again has it set up for a continued breakout. Gold also representing a safe haven here for investors, a place to go with investment money during these now very uncertain times, particularly with the holiday before us, with markets being closed globally. Investor money is pouring into energies as a safe haven. Gold as a safe haven. We're seeing money come out of the U.S. Treasury, pressure on the dollar, although the British pound sterling most notably at a pivot area at the $2 mark, or £2 to the dollar, I should say, helping to keep a lid on the rally there. Copper flagging a bit here the past couple of sessions due to the economic worries associated with the geopolitical strife and the potential for central bank intervention and the worries for a slowing economy going forward. Some of the U.S. economic data in particular has been very disappointing over the past several days, but it has been ignored by the energy markets, but heated by some of the other commodities like copper and some of the agriculturals. But again, we remain bullish really across the board here, particularly as it relates to energy and the precious metals, particularly as the Pakistan situation bears close watching. With that, Caitlin, I wish you a very happy New Year.
Thanks, John. That was John Kilduff from Man Financial. I'm Caitlin Sisney. Join us later today for the Commodities Recap right here on ETVFutures.com.